I make sure that, yes, as I can see, I can be seen and heard. This is very good. And then let's start our webinar. And thank you everyone who joined. Today we are going to discuss recent tax changes that affected cross-border structure. And the main focus will be Russia, but we will also discuss other countries in the region, the CIS countries. Yeah, this is the plan. Before we start, let me say a few things on the administrative side. First of all, you can ask your questions. There is a tab called Questions in the upper right corner. So you can type questions there, and we will try to answer them as we go. This is one thing. Second, the most common question that we receive, by the way, is whether webinar materials will be distributed, and the answer is yes. We will distribute the presentation as well as the recording of this webinar after the event. It will take time, so please be patient, but hopefully in a few days, sometime next week, we'll be able to distribute both the slides and the recording. Okay. What else? Yes, a few words about myself, just in case you don't know. My name is Viktor Kalgin, and I am a tax partner at a company called KPMG, which is a legacy firm that remained and maintained its business after KPMG left Russia. So this is what I am, and I I help my clients to manage their cross-border structures and ensure that the cross-border structures, investment structures, are tax efficient and do not, have unreasonable tax risks. And I help my clients to restructure and adapt their cross-border structures to ever-changing business and tax environment. This is what I am. And I will not be alone. We'll have two more speakers during the event. First of all, Ilya Samuylov, a director from the indirect tax team in Moscow, will join later, and he'll tell about the changes in the VAT environment in Russia and in the customs union in general. And also, I'm glad to say that Sardor Shermatov, who is a director and the head of tax practice in Uzbekistan, will join as well, and he will cover tax changes in Uzbekistan. So this is the plan. I think on the administrative side, this seems to be it. And then without further ado, let's start. And yes, the next 2 hours will be about changes in tax changes that affect cross-border structures. And as I said, there will be 3 sections basically in our presentation. The first part will be about the changes of tax changes that affect cross-border structures, and we'll talk about Russia and other CIS countries. The second part will be specifically devoted to restructuring and changes that affect restructuring projects. We'll talk about that in the second part, and finally we will address any questions that we'll have that we will receive during the event. As I said, we'll try to address the questions as we go, making a pause and reading whatever we receive and whatever you ask us. Yes, so this is the plan, and do not hesitate to ask questions. I think that the most valuable and the most useful way for all of us to participate and to conduct this event is to make it as interactive as we can. So feel free to ask questions. And at the end, I will also say a few things. I will not announce specifically what I will do, but there will be sort of surprise at the end of the webinar. So who will listen all the way up until the end will be given an opportunity, which I will not announce right now. It will kind of wait until we come to the end. So this is the plan. And without further ado, let's start from the first part and figure out what tax changes happened in Russia over the last few months. And we'll talk about 4 things basically. The first one is changes in tax treaties, and the recent months and the whole year was rather active in this sense. Second, Russia has various lists of various blacklists of countries, and we will discuss how they affect cross-border structures, what they mean, and what changes are going to be introduced. Third, we'll talk about profits tax, a few changes we'll discuss briefly, and VAT. And the VAT part will be taken care of by Ilya Samuylov, as I said. This is the plan, and let's start from tax treaties. First of all, why tax treaties are important? And Russia has more than 80 double tax treaties, and they are important because of several reasons. First of all, it is possible to reduce withholding taxes, as we all know. Passive income paid outside of Russia, such as interest, royalties, and dividends, is subject to withholding tax, and the rates can be significantly reduced or even eliminated. Exemption can be applied based on double tax treaties that Russia has concluded with other countries. This is why it is important to apply the treaties and to prove that there is a basis for treaty benefits. Second is exchange of information. It is possible to exchange information about taxpayers between tax authorities of different countries on the basis of tax treaties that they conclude. And it's on the tax authorities side, but it still impacts the structures and the way how taxes work globally. And finally, there are domestic exemptions in many countries, and Russia is not an exception. There are domestic tax incentives or exemptions that are based on availability or specific provisions of double tax treaties. This is why it makes a difference if there is a double tax treaty with a specific country. So this year was active in this area, and what we see, Russia has suspended or a couple of treaties ceased to exist, so to say, or suspended. The first one is Russia's double tax treaty with Latvia, which was suspended in May from the Latvian side, and Russia had also suspended it in September. So it's no longer applicable. In March, it was a discussion, or at least some news emerged, that the US considers to change or revisit its double tax treaty with Russia, and obviously being the largest economy and one of the largest investors in Russia, the United States, and changes in this treaty affect many taxpayers. However, no specific actions, at least visible, no specific actions were taken, and the treaty is still in force between Russia and the United States, although discussions, at least internally in the United States, seem to be taking place. Tax treaty between Russia and Ukraine was terminated, and it will no longer apply starting 2023. There were also news that the renegotiation of the double tax treaty between Russia and Switzerland were put on hold. And here there is just a bit of context. Russia, over the last few years, tried and successfully renegotiated several double tax treaties. And the tax treaties between Russia and three countries, Malta, Luxembourg, and Cyprus, were renegotiated. And discussions with the Netherlands resulted in termination of the double tax treaty between Russia and the Netherlands. And the next on the list was Switzerland and also a couple of other countries. It's Hong Kong and Singapore. Russia tried or announced that it was planning to renegotiate treaties with these three countries. And we knew that last year, for example, negotiations with Switzerland started, but then they were put on hold. There were some news that indicated that there are no longer discussions about renegotiation of the treaty with Switzerland, which to a certain extent may be good news because Russia tried and had been trying to increase withholding tax rates, and renegotiation of treaty, for example, with Luxembourg, resulted in increase of withholding tax for dividends from 5 to 15%, and the same is true for interest. Interests used to be exempt until recently, but then the renegotiated treaty with Luxembourg increased it to 15% as well. So the way it goes with Switzerland seems to be rather positive, because the favorable rates that were in the double tax treaty between Russia and Switzerland, which are 5% for dividends and 0 for royalties and interest, respectively, they put on hold, and these favorable rates still remain in force, and the treaty is in force as well. There were news that Austria suspended automatic exchange of information with Russia, and the same is true for Switzerland. Switzerland also declared that it stopped cooperating with Russia in terms of exchange of information. So this is the developments, and I'm sure that more countries, in one way or another, suspended their cooperation with Russia. But as you can see, only 2 treaties this year stopped to apply, and still, all other treaties are in force, which indicates that Russia. It looks like Russia takes rather passive, stance, passive approach to tax treaties. It stopped negotiating with other countries with which it intended, Russia intended to renegotiate treaties, and does not, take initiative to change any treaties. Russia sort of reacts on what other countries are doing in this area, at least. But there are some good news as well. Russia announced that there is a draft engagement with Oman, draft agreements with Oman, draft double tax treaty. It was approved by the Russian government, and we may see it signed in the next maybe year or two. And also there seem to be discussions to improve double tax treaties that Russia has with at least 3 countries, being Turkey, Malaysia, and the United Arab Emirates. So, for example, Russian treaty with the United Arab Emirates is rather specific and weak, because it applies to state companies or sovereign companies, state institutions only, which means that regular investors, they are not able to apply treaty benefits, which is unfortunate, because we see more interest from Russia in investing, from Russian countries, from Russian companies, Russian businesses, to invest in the United Arab Emirates, and this is obviously good news and can improve cross-border structures where the United Arab Emirates is present. But we'll need to wait and see. The treaty with Turkey, for example, is better, but it's still not ideal. I think there are 10 the withholding tax for each 3 major type of income: interest, dividends, and royalties is 10%, which is far from being the best treaty rates that Russia has with many other countries. So we should wait and see, and let's continue monitoring the developments. But yeah, there may be some positive developments in some of Russian double tax treaties with other countries. Let's move on to blacklist of countries, and Russia has been updating over the last year. Russia has been updating its blacklist of countries, but let's look at what types of blacklists Russia has. The first type is the oldest one, is the list of offshore countries that the Russian Ministry of Finance publishes. It dates back to 2007, and this is a relatively stable blacklist, and it is used primarily to apply zero dividends participation exemption, basically 0% tax rates on dividends that Russian companies receive from non-Russian subsidiaries. So this list is used primarily by Russian businesses, and it is relatively stable. The Ministry of Finance rarely adds or removes anything from this list. The second list is, and we'll talk about 4 lists, and we'll go into more detail, some more detail in a few minutes. But let's look at the list themselves. First of all, so the second list is a list of countries that do not exchange information with Russia, and it is the list which is published and maintained by the Russian Federal Tax Service. It's a separate list. Sometimes it is mixed with the list which the Russian Ministry of Finance publishes, but it's really different, and they are quite different, and they're used for different purposes. This list of countries that the Federal Tax Service maintains, it is used mainly for CFC purposes. Certain CFC exemptions, and we'll talk about it a bit later, but certain CFC exemptions apply only to the extent that the subsidiary or the controlled foreign company is not in the country that is part of the Federal Tax Service list. And this list is updated much more often. Usually annually we see additions and removals from this list. The third list is a new one. It is a list of non-friendly, so-called non-friendly countries, and it was adopted by the government in March this year. And this list is used primarily to restrict or restrict certain transactions with entities that are located in the countries from this list. And we saw a couple of changes to this list as well. And finally, next year there will be a new list of countries that are blacklisted for the purposes of using state subsidies. Yeah, we'll talk a bit later about this. So there are at least 4 lists. There are even more, but those are the lists which are used for tax and some non-tax purposes. Okay, so yeah, as I said, the list which was published by the Ministry of Finance is stable. It is not supposed to be changed. But the list of countries that do not exchange information with Russia is going to change next year. Not dramatically, but still. As I said, it is used for CFC purposes. And for example, if a CFC is located in the country from the blacklist, it is not able to use certain exemptions. And also, it is not possible to use unaudited financial statements to determine CFC profits if the company, if the CFC is in the country which is blacklisted. So what changes are expected? There are some countries, and quite a few actually, that are going to be removed from the list. You see the list of countries on the slides. I think among them, they are not that commonly used, but for example, Russian companies and businessmen sometimes have subsidiaries in Gibraltar or Barbados, and these countries, they are obviously usually regarded as offshore countries. But surprisingly enough, the Federal Tax Service removed these 2 countries along with a few others from the list. Which is to a certain extent a positive development, but usually there is a requirement to have a double tax treaty to apply CFC exemptions and other CFC benefits, which Russia doesn't have double tax treaties with Barbados and most other countries here. They are not present. They're not present. So the impact of this change is not dramatic, which I cannot say about the included countries. Canada is going to be included in the list in the blacklist that the Federal Tax Service publishes, and this will mean that Canadian subsidiaries of Russian controlling persons will not be able to, for example, to use the CFC exemption, which is based on effective tax rate, for example, or it will be necessary to provide audited financial statements to use the financial statements to calculate CFC tax base. So the new list will come into effect next year. Okay, so the next list of non-friendly countries, which is a new one, and which is probably most significant developments in terms of blacklisting and also, managing cross-border transactions between Russia and other countries. This list seems to be most significant because this list is used to restrict certain transactions. For example, sale and transfer of shares and other securities is prohibited unless specific circumstances or specific approval is granted. If the shares or other securities and even participatory interests in Russian limited liability companies, they are owned or ultimately controlled by persons or entities located in the non-friendly states. And also certain transactions such as provision of loans to those non-friendly states is either restricted or significantly complicated. So this list is used for currency control purposes and to restrict certain transactions. And this list contains more than 40 countries, and it includes the whole European Union, the United States, and a few other major economies, major world's economies, which makes it really significant and complicates, for example, dealing with subsidiaries of entities that are located in Russian subsidiaries of the entities that are located in these blacklisted countries. It was revised a couple of times, but the main countries were included in the very beginning, but we see that it's being expanded to British Overseas Territories and Bahama Islands, for example. It is the latest change. Okay, and we'll talk about this non-friendly list a bit later. And we also have a question. This question we received before the webinar, and those who registered had an opportunity to describe a specific situation or ask a question. And this is one of the questions that we received. And what are I'll read the question. What are current divestment opportunities and restrictions regarding participations in Russian entities? And yeah, this is I put this question here because it is mostly related to the list of countries, like the blacklist of countries. And well, so for example, if a multinational corporation would like to decided to divest from Russia and sell its subsidiary in Russia, then the transaction will be restricted unless a specific government approval is provided. And this is the most common situation, that the most common approach, sort of path that multinational companies have to take to obtain the government's approval to divest from Russia, to sell its Russian business. And I've seen a few cases where such a government approval was successfully obtained, and it takes time. It is complicated. It usually takes a few months, and the approval can't be guaranteed. I've seen instances where it was requested, but until now hasn't been received. But when it is successful, usually the approach that is taken is that the request is first submitted to the ministry which oversees the industry where the Russian subsidiary operates, whatever it is, agriculture or production or some other oil and gas, whatever. And then after discussions within the ministry, a petition is then submitted to the government. And one of the key considerations seems to be, although I do not really support, I've seen instances where this approval was granted, but this is not the tax area, and I do not support those discussions and requests. But it looks like one of the key criteria, one of the key factors is the price at which the subsidiary or the business in Russia is being divested. And the higher the price, it looks like the more difficult it is to receive the approval. There is also another possibility. It is possible to, and we'll talk a bit later about this in the section which is where we'll discuss the restructuring changes and restructuring opportunities, changes that affect restructuring projects. But I'll say a few words now. It is possible to prove that Russian subsidiaries ultimately controlled by a Russian entity or citizen, in which case it is possible to make transactions which are otherwise prohibited, because there may be, so as you can imagine, there are businesses that even Russian businessmen have, but control them through, for example, holding companies in the European Union, and transactions with such businesses are also under this restriction, because the whole European Union is blacklisted, and separate holdings are not able to divest. Dutch holdings, for example, are not able to sell or transfer their Russian subsidiaries to whatever destination it is supposed to be transferred. So it's supposed to be transferred, and but if the ultimate control is with Russian beneficiary, and the control is disclosed with the Russian tax authorities, then this is the basis for the transaction. It is possible to make transactions even without the government's approval, if ultimately control is ultimately the securities or the non-friendly, the company in the non-friendly country is controlled by Russian tax residents, either individual or company, which creates an opportunity to even for multinational companies. For example, I've seen cases where transaction was performed at an upper level, not with the Russian subsidiary exactly, but for example, management bought out a Dutch holding that owned Russian subsidiary, and after the Dutch holding becomes controlled by the Russian management, this forms a basis for future transactions with the Russian subsidiary, and then after the control is closed, it is possible to transfer the shares or participatory interests in the Russian subsidiary in this case. But yeah, obviously it requires additional planning and introduction of Russian control person, or even divestments at an upper level, and then when the whole chain is controlled by Russian citizens, for example, then further restructuring or changes in the structure become possible. So this is to answer the question about divestment opportunities and restrictions regarding participations in Russian entities. And we'll talk a bit later about this as well. And the third and final list that I wanted to discuss is the list of countries for the purposes of restricting state subsidies. It's not specifically a tax issue, but it's interesting that this development occurred, and historically there was a provision in the Russian budget code to limit subsidies to subsidiaries, Russian companies that are controlled by companies that were blacklisted by the Ministry of Finance, and the same blacklist was used as it is used for tax purposes, which is the oldest one, published by the Ministry of Finance, and contains mainly offshore states. So, for example, hardly any European country is in this blacklist. I can't remember any, but offshore countries are there. But holdings in the Netherlands, for example, in Cyprus, didn't interfere, and I mean they are not part of this old blacklist, and they holdings in these countries were able to own Russian assets without limiting their opportunities to apply and receive state subsidies. But next year it is planned to change this, and there will be a new list for these specific purposes. And surprisingly enough, this list includes, maybe not very surprisingly, but this list is going to include Cyprus and Switzerland, but for some reason doesn't include the Netherlands and Luxembourg. So whatever structure we have, if in the structure we see Cyprus or Switzerland or a number of other countries, then the Russian subsidiary in this structure will not be able to use budget state subsidies. And the threshold is just 25%, which is really low. But the Netherlands and Luxembourg were lucky not to get into this list. Mostly, based on my experience, it is relevant for agricultural industry where subsidies are not uncommon. Yeah, and the list will come into force next year. Okay, let's talk about let's spend a few minutes to talk about other changes. This is the next section. I'll talk about two developments basically. One is it is planned to maintain the 50% limit to utilize losses for Russian companies. So I think for a few years, the rule was that, yeah, we used to have a rule that's allowed to utilize losses in full against current year's profits. So for example, if a Russian subsidiary generated losses over the startup period, but then started to be profitable, then the losses were allowed to be deducted in full. But a few years ago, limitation was imposed not to allow to utilize losses to reduce profits, current year's profits, by more than 50%. And it was introduced as a temporary measure, but year after year it was prolonged, and now it looks like it's going to be prolonged for a long time. At least the Ministry of Finance announced that it's going to extend it to until the year 2030. But at least for a couple of years, next year and probably the year after, it's going to be in place because the law came into force that extended the loss utilization limits until the next year, and I think the year 2024 as well. Okay, this is the first thing. Obviously, it's not very favorable, but it is what it is. And the second thing is changes that affect tax incentives for IT companies. And in Russia, there is quite a favorable tax regime for IT companies. This year, it changed slightly. First of all, companies that created as a result of reorganization, they are no longer able to use this specific IT exemption, IT incentive. And I think the reason is because many businesses, for example, finance industry, started to demerge new entities from the existing companies and transfer their IT functions there. And previous rules allowed to use the IT benefits for those demerged new entities, but it's no longer possible. The rule was introduced starting the middle of this year. I think it was the 1st of July 2022 when it stopped to be possible to use the specialty regime for divested entities, for reorganized entities, for demerged entities. But there is good news as well. Some requirements have been either abolished or reduced, and the revenue threshold, and the rule is that the IT company needs to generate certain volume of, certain share of, good revenue, and it was reduced from 90% to 70%, these thresholds, and the minimum personnel requirement was also abolished as well. And we'll talk a bit more about this specific IT regime, because one of the questions that we received is about using IP box company so. Yeah, the question is on this slide. I'll read it out. Taking into account the current changes, where is it preferable to set up an IP box company if the technology is Russian but scalable to the world? Yeah, it's not uncommon to see Russian businesses now trying to move their IP that is used globally somewhere outside of Russia. And despite Russia has a good IT company regime, some alternatives are being considered. And I even prepared a small table here that compares along a few tax criteria, a few tax regime, a few IP box regimes that are available, well, in some other countries. But let's start from Russia. In Russia, the corporate income tax rates for IT companies is either 0 or 3%. It's 0 is temporary. This year, next year, it will be 0, but then it's supposed to be increased back to 3%, so the initial rate. Yeah, and if this company receives royalties, then no withholding tax applies, and which is going to be important if we transfer IP somewhere else and then charge license fees to Russian companies, then withholding tax will be due. We'll see this in a minute for other countries. But then when profits are generated, then they can be distributed to shareholders, and the minimum rate is 5%, but most commonly 15% applies due to various circumstances. There is withholding tax in Russia, which makes this IT company regime less beneficial compared to some other countries. And let's consider, for example, Kazakhstan. In Kazakhstan, there is a IP hub or Astana hub that also provides for a 0% corporate income tax rates. But when royalties are charged from Russia, from Kazakhstan to Russia, and then paid from Russia to Kazakhstan, then withholding tax applies of 10% applies. Well, in other countries it can be different, but yeah, Kazakhstan doesn't really have treaties where royalties withholding tax rate is lower than 10%. And dividends withholding tax for Astana Hub companies is 5%. So compared to Russia, there are some advantages and disadvantages, but yeah, the IP regime in Kazakhstan is really comparable to Russia, which means that it can be used as a substitute, as an alternative to Russian IT companies. We also see interest to the United Arab Emirates, and there the corporate income tax rate is 0%. Unfortunately, when royalties are charged, they are going to be subject to 20%. And I mentioned already that the United Arab Emirates have a specific, rather peculiar double tax treaty. It's not that it doesn't exist, but it doesn't apply to most cases, to commercial transactions, to commercial companies, which means that the domestic rates will apply to royalties paid from Russia to the United Arab Emirates. It may change in the future, but it is what it is currently. Which yeah, when charging royalties from Russia, from the United Arab Emirates, from the IP company there to Russia, we'll need to account for the 20% withholding tax rate. But then dividends of the company can be distributed free of withholding tax. And finally, Cyprus. Cyprus has an IP box regime, and it is very commonly used by Russian businesses as well as other companies as well. And yeah, you can see on the slide, despite the not zero, but at least 2.5% corporate income tax rates, withholding tax on royalties with Russia will be zero, and dividends, Cyprus doesn't have withholding tax on dividends. So these are at least a few other possibilities for businesses to set up IP companies. So yeah. Okay, now we should move on to the VAT section, and I now have to pass the floor to Ilya. Ilya, can you hear me?
Yes, thank you, Victor.
Yeah. Thank you, Ilya. The floor is yours. I will disconnect.
Yeah. Thank you. Hi everyone. Let me introduce myself once again with a bit more details. As Victor mentioned, I'm Ilya Samuylov, Indirect Tax Director at KPMG Russia office. I advise large Russian companies and multinational companies on indirect tax issues for more than 15 years already, focusing mainly on VAT aspects, especially VAT on electronic services, VAT refunds, and other issues which arise for such companies. Today we will talk about three main topics which are related to the changes which occurred in 2022 or expected in next year. First of all, we will talk about electronic services, then we will speak about accelerated VAT refund procedure, and finally discuss the VAT aspects for Eurasian Economic Union. So let's start from electronic services. As you probably know, this year, as of 1st October 2022, the VAT rules for business-to-business electronic services have been changed. In particular, now foreign companies supplying electronic services to Russian business companies should not pay and report VAT anymore in Russia. As of this date, Russian customers should be responsible for VAT payment and reporting in Russia as a so-called tax agent. So the VAT mechanism should be as it was before 1st January 2019. And of course, these changes are very expected by the business and should allow many foreign companies to simplify their compliance in Russia. At the same time, there are few issues which are still open because the law changing the rules did not address the VAT registration and deregistration issue. So in particular, the rules for VAT registration and deregistration are still the same as they were before 1st October, which means that theoretically foreign companies supplying business-to-business electronic services should still be liable to tax registration in Russia, which seems a bit strange, taking into account that such companies should not pay and report VAT due on electronic services anymore. But still this question exists. And for companies who are registered in Russia, this means that they should decide whether to apply for VAT registration now or wait for changes of the deregistration and registration rules, or just in any case apply for the registration. So that's the main question for such companies. And as for the companies that just start their business in Russia, for example, some companies who start to provide electronic services to business customer in Russia, the question is whether they should apply for tax registration or not. Based on our experience, we see that our clients, they tend to take a decision based on the particular case. Some of them decide to apply for VAT registration if they stop the provision of electronic services. Some of them decide to apply for VAT registration even if they still supply their services to Russian customers. But some of them decide to keep the VAT registration for a certain period of time. And all the three approaches may be reasonable depending on the particular case of the company. And hopefully that the authorities will finally change the registration and deregistration rules. But we also were aware of a draft law which intends to change these rules. We can't predict when these rules will be introduced. Another area which requires attention of the providers of electronic services relates to transition period from 1st October to the moment when the company will be deregistered in Russia. So first of all, it is essential to determine how to pay and report VAT, which is due on electronic services and other services which are not treated as electronic. The first question, how to pay VAT on electronic services, may be a bit less complicated. And in particular, we received a question from one of the participants of this webinar, mentioned in its registration form. So from what period these new rules should be applicable to electronic services? The answer is more or less simple here, because for each electronic service paid after 1st of October, the new rules should apply. So simply speaking, this would be the Russian business customers who should take care of VAT in this case. And foreign electronic service provider should not pay and report VAT if the payment is received after the 1st of October. For other services which are not treated as electronic, the consequences may be a bit more complicated, because formally, under the tax law, the foreign service provider should still be responsible for VAT payment and reporting with respect to non-electronic services. And this is confirmed by the tax authorities. But at the same time, the tax authorities clarified a few times in past that even if the law requires foreign company to pay VAT, in such cases, the Russian business customers may pay VAT as a tax agent. Although this is not in line with the law, the tax authorities promised, simply speaking, not to apply penalties and not to assess VAT to foreign company or to a Russian business customer. That's why this approach can work, and again, this is confirmed by the tax authorities recently. So this may be used as one of the solutions for this particular case. Another important point here is that even if company decides to apply for VAT registration and submits the application to the tax authorities will have, in the best case, up to 30 business days to consider this application, or even up to 6 months, because they will need to complete the in-house tax audit of the last VAT return, which may take up to 6 months. That's why the tax authorities most likely will use this opportunity to check everything and to be sure that the foreign company paid VAT due on electronic services in past correctly, in particular for Q3 2022. And that's why for business it is essential to check potential risks which may be identified by the tax authorities during such tax audit. Among the areas which usually attract the attention of the tax authorities, I can mention the following. The period when VAT due on non-electronic services is reported may be questioned by the tax authorities, because the rules on this matter are not so clear. And from one hand, the tax law prescribes that VAT due on non-electronic services should be reported based on accruals. So simply speaking, once the service is provided. But the tax authorities now tend to take an opposite approach, saying that VAT due on non-electronic services should be charged and paid based on the payments as for electronic services. So that's why if the tax authorities identify that foreign company paid VAT due on electronic services based on accruals, they may try to challenge this approach and to assess at least late payment interest if VAT was paid later than expected by tax authorities, or in the worst case scenario, to assess the full VAT amount for a particular period. For example, if they just check Q3, see the payment for non-electronic service in Q3, and they may require foreign companies to pay VAT in Q3 without regard to the fact that VAT was reported and paid in past periods. Sometimes it happens. Another potential risk may be related to adjustments of the service fee previously charged to the customer. Business tends to adjust the service fee, adjust VAT liabilities with this respect in the period when this adjustment takes place, but the tax authorities may require foreign companies to do so for a period when the initial service was supplied or was paid by the customer. Of course, there may be other risks which may be identified by the tax authorities, but they are not so common, so I wouldn't spend too much time on them. Another point which we would like to touch today is accelerated VAT refund. Accelerated VAT refund means that the tax authorities should approve the VAT refund within approximately 2 weeks, a bit earlier than 2 weeks without completion of the tax audit of a particular VAT return. This does not mean that the tax authorities will not conduct this tax audit. They definitely will conduct it, but later, after they will return the VAT claim for refund. And this may be a very good instrument to improve the cash flow, especially in current circumstances. And that's why for 2022-2023, the authorities decided to simplify the conditions for application of this accelerated VAT refund, because previously only large companies or companies that are ready to spend some money on bank guarantee can apply this procedure. For 2022-2023, the rules were simplified. As a result, almost any company or any taxpayer can apply for accelerated VAT refund, assuming that the amount of VAT claimed for refund is less, or at least does not exceed taxes paid for previous calendar year. This may give a very good opportunity for companies to improve their cash flow. That is why many companies they tend to consider at least an opportunity to apply this accelerated VAT refund. Moreover, the tax authorities usually say, in particular, the head of the Federal Tax Service usually mention that they work on further improvements of this procedure, and in 2023 further changes of this procedure may be expected, for example, related to provision of bank guarantees for those who would like to refund VAT in the amount exceeding the taxes paid for previous calendar year, and some other simplifications. So from one hand, it is a very good opportunity, and many of our clients consider it. But from other hand, usually the chief accountants, the CFO, tax directors, they sometimes even afraid to apply for this procedure and to claim VAT for refund. Because of the desk tax audit or in-house tax audit of the VAT return, which will be conducted by the tax authorities, because the tax authorities will carefully examine the VAT claim for recovery. They will check documents, suppliers, methodology of the company. And on this slide, you may see some statistics we collected on this matter based on the court practice. So more than half of the court cases related to VAT refund, they are triggered by issues with suppliers or documents. And almost one-third of, more than one-third of the cases, they were triggered by the issues related to methodology. So what does it mean for a company? This means that VAT refund may be claimed using the accelerated procedure or even using the general procedure only if the company is sure that the company checks the suppliers, they have appropriate procedure, and they collected appropriate documents showing that the company acted with due diligence when they choose a particular supplier. Because if the tax authorities identify mismatches between VAT return of the supplier and VAT return of the company where the VAT is claimed for recovery or for refund, in this case, the tax authorities will definitely try to deny this VAT refund. As for the documents, we usually see that companies suffer from the lack of processes to collect, check, and store the documents, because sometimes there are a lot of documents which are not properly checked, and that's why a particular accountant or tax manager or tax director can't be sure that these documents are correct, and that's why they tend to postpone the VAT recovery rather to claim it for VAT refund in a particular period. And in order to avoid any mistakes or inconsistencies in VAT invoices and primary documents, which may lead to potential problems upon VAT refund. Of course, it is clear that there should be quite clear process to check all these documents, and only after such check, these documents may be used for VAT refund. And the third area where the problems usually occur is methodological issues, because sometimes the suppliers applied incorrect VAT rates. Sometimes the companies they have problems when they try to claim VAT for recovery based on advances, or sometimes companies claim VAT which in fact relates to sales which are not subject to VAT. In this case, VAT refund is not possible. So that's why it makes sense to ensure that company have proper methodology and proper analysis of tricky VAT issues before claiming VAT for refund. And I also would like to say a few words about our approach, because previously it was a common approach to apply for VAT refund first, and then if the tax authorities identify some issues, some mistakes, it was quite common to appeal and to have a dispute with the tax authorities on this matter. And this strategy was quite successful in certain cases, because the courts tended to support the taxpayers, and this allowed the taxpayers to get the VAT refund finally, even if this required court proceedings. But now we see the trend, and we also analyze the statistics and the court practice, and see that now the courts tend to support the tax authorities. So if the tax authority decided that VAT refund is not allowed for a particular quarter or in a particular case, in 90% of cases, the court will support the tax authorities. At least the statistics of a few past years shows this. That's why we recommend all of our clients to focus on preparation for VAT refund rather than on dispute the decision already taken by the tax authorities. That's why, as a stage 1 or even stage 0, we suggest companies to check the current approach to analyze whether there are any areas where VAT can be claimed for recovery quicker than they do. Or we suggest companies to check whether it is possible to apply accelerated VAT refund procedure, whether it is reasonable to apply this procedure, because sometimes if VAT is claimed for refund using this procedure, but then the tax authorities decided to deny this VAT refund, the taxpayer should return VAT amount plus pay extra penalties and late payment interest. That's why we suggest to carefully check whether this accelerated procedure may be applied, and only if the company is sure that for at least 90%, even 100%, the company is sure that this VAT can be refunded, only in this case apply for accelerated VAT refund procedure. And once the decision is taken by the company, it is reasonable to check the documents, suppliers, and methodologies we already discussed, or even maybe interview the employees which may be interrogated by the tax authorities during tax audit, sure that the employees will provide a correct picture to the tax authorities, because the tax authorities tend to use the explanations provided by the employees and to use this as a basis for potential VAT assessments. And if some risks are identified, of course, the company may take steps to mitigate these risks, to collect some extra documents, maybe collect some outstanding primary documents, to check suppliers again, to collect some additional evidences that suppliers are not a bad faith supplier, and the company may make appropriate steps to choose them. And once all these steps are made, then the company may apply for VAT refund, and then during the tax audit, it may be quite simple to reply to the request of the tax authorities, provide relevant documents and explanations, and hopefully to get the VAT refund. And the last VAT topic which we would like to discuss today relates to Eurasian Economic Union, because this year we see that we expect few changes which may occur next year. It should be noted that the changes, the process to change the rules for Eurasian Economic Union is a bit more complicated than the process to change the VAT rules for a particular country, because in this case, all 5 members of Eurasian Economic Union should adopt and we agree with all these changes. That's why the process is quite complicated. That's why we see already few changes which are going to be implemented, but we can't say right now when exactly when these changes will come into force. But more or less definitely we can say that these changes most likely will be adopted, and most likely we will use these rules next year, or in the worst case scenario 2024. So there are 2 main areas. One area relates to services rendered from one member state to another member state, and another area relates to the supply of goods to export from one country and import to another country of Eurasian Economic Union. The main changes which we expect are as follows. So first of all, the VAT rules for services consumed by a branch representative office or a permanent establishment of a customer will be changed. So for example, if a Russian company now provides services to a customer in Kazakhstan, and this customer in Kazakhstan has a branch in Armenia, for example, in this case, now the VAT consists are quite ambiguous, and once these changes are adopted, the VAT will arise in a country where the branch is located. Because now one may say that it is not so clear, and VAT should arise in Kazakhstan as well, and this may lead to double taxation both in Kazakhstan and in Armenia. This is applicable only for certain types of services like marketing, advertising, consulting, some other services. Another changes which are expected relate to electronic services, and last week the authorities of Eurasian Economic Union adopted these changes. Simply speaking, there would be a definition of electronic services in the VAT law of Eurasian Economic Union. There will be some rules which are quite close to rules applicable in Russia now for business to consumer services. So simply speaking, a service provider will have to apply for registration in a country where the consumer of the electronic service is located, and will have to pay VAT there. And there are also some changes of VAT rules for consulting, legal, and some other services if they are rendered to an individual. So now in this case, it is quite unclear how VAT should be paid, because individual can't pay VAT as a tax agent, but the law says that VAT should be paid by the customer. Once this change is adopted, this would be the service provider who would be liable to VAT payment in this case. And as for the goods, there are some changes as well. First of all, import of goods will from supplied by an individual will trigger VAT in the country where the goods recipient is located. So, for example, if individual from Russia supplies goods to Kazakhstan, the company in Kazakhstan purchasing these goods should pay import VAT. And moreover, there are a number of changes aimed at improving the information exchange between the tax authorities of different countries in Eurasian Economic Union, which should give additional instruments for the tax authorities to check the supplies. For example, if the tax authorities in Kazakhstan see some mistakes in documents upon import of goods into Kazakhstan, and these goods were exported from Russia, the Kazakhstan tax authorities will have to provide this information to the Russian tax authorities, and Russian tax authorities may use this information to challenge the 0% VAT rate applied upon export of goods from Russia, and vice versa. That's why all these changes, once they will be approved, will lead to the following implications for business. So it is more or less clear that the business will have to check the approach to the services to ensure that they pay VAT for services where they should do so, and to ensure that they use the opportunities not to pay VAT in the cases when this will be possible based on the new rules. In particular, it makes sense to check whether the customer has a branch, who should be considered as real consumer of service, branch or head office of the company, to determine the criteria, how to distinguish who is an actual consumer of the service, to check the substance of service in order to be sure that the service is indeed, for example, marketing or consulting services. And this is in line with the definition of the services in the VAT law of Eurasian Economic Union, and in line with the interpretation of the tax authorities of a particular country, because the tax authorities in Russia and Kazakhstan, Armenia, and other countries may have different views on treatment of services. And of course, to check that the contract primary documents, deliverables, and other documents, they clearly describe the service as consulting, marketing, advertising, or some other services. And as for the goods, it is definitely essential to check the supply chains to ensure that there are no VAT inefficiencies there. So in particular, to ensure that 0% VAT can be applied upon export from a particular country of Eurasian Economic Union, because otherwise, for example, if the documents are not filled in correctly and the tax authorities identify this upon import of the goods into another EU member state, in this case, tax authorities may provide this information to the country of export, and the tax authorities in the country of export may challenge the 0% VAT. And this will lead to extra non-recoverable VAT costs, which definitely we would prefer to avoid this cost, definitely. This is especially relevant for new supply chains when a company consider alternative supply chains for procurement of goods from countries located in Eurasian Economic Union, or from countries outside of Eurasian Economic Union, when the supply takes place through the countries of Eurasian Economic Union, and for supplies to new markets as well. So these are the main aspects related to VAT in Eurasian Economic Union, which we would like to cover today. Of course, there are much more changes which I expected, but we would be glad to discuss them with you once they were adopted, or at least would be quite close to be adopted. So Victor, now I give the words to you. Victor, sorry, at least I can't hear you. Maybe you are on mute. I'm not sure if the participants hear you well.
Yeah, I was on mute.
Yeah,
I was on mute.
now
Thank you, Ilya. Yeah, can you hear me now?
Yes.
Can you hear me now? Okay, great. Yeah, there must be a delay of a few seconds before you hear me. But let me read out one question. You might have already answered it in one way or another, but still let me read out the question that relates to
Sure.
electronic services. So Tatiana is asking for B2C, the scenario as it was before the 1st of October. I think the question, is about what we discussed what changed, but what hasn't changed is also important.
Sure.
Can you briefly tell us?
The rules, VT rules for B2C services are still the same as they were before 1st October. So if a foreign company supplies such services to individuals in Russia, such foreign company should be VT registered in Russia, pay and report VT in Russia. These are the rules. In practice, of course, there are some difficulties sometimes with actual payment of VAT, but this is kind of technical issues which should be resolved. The rules are still the same.
Yeah, but obviously B2C stands for business to clients, and the idea is that for individuals, then when they acquire services from outside Russia, still the liability to pay VAT remains with the foreign non-Russian supplier.
Yeah, the foreign supplier will have to do this. So.
Okay. Yeah, I think there might be a technical question here. If individuals who are registered as individual entrepreneurs, they still fall under the either one or the other category. What is the rule?
Yeah, exactly.
In this
Thank
case?
you for raising this issue, Victor, because in practice, the individual entrepreneurs they should be treated as a business customer. So, simply speaking, if foreign company supplies electronic service to individual entrepreneur, this is individual entrepreneur who should pay VAT rather than a foreign company. And sometimes in practice, it is quite difficult for a foreign supplier to understand who is the actual customer, the private individual or individual entrepreneur, and foreign suppliers in this case should develop some solution, and usually they tend to check additional details, to collect additional information about the customer, like for example to provide them a tax identification number and code of reason of tax registration, which may show their status as an individual entrepreneur. Some companies prefer to collect some other information. Of course, it depends on the particular case, what information can be collected, what is convenient for a foreign supplier to collect, what is not convenient, and so on. And of course, from one hand, these changes which we discussed make the rules more simple for business-to-business supplies, but for business-to-consumer, to client supplies, these rules became again not so easy in terms of determination of the status of client. I know that many companies faced this problem before 1st January 2019, when the rules were like they are now. And so they have to find some solution. As an alternative, such companies may think, what if we just report and pay VAT on all supplies to all individuals, and that's it? This may be a solution as well, but which requires, of course, negotiations with customers or proper, at least, information of customers about this decision.
Yeah. I think this is clear. Yeah, thank you, Ilya. Before you leave, can you see the slide that reads Kazakhstan? Because this is going to be my next
I see it well.
slide.
So I hope that
Can you
everyone also sees.
Okay, very good. Then it means, yeah, it means that the technology is working, and we continue, and we'll move on to Kazakhstan, which is, yeah, we are still in part one. We are discussing the changes that affect cross-border structures, and we completed Russia, and Ilya also touched upon some indirect tax changes relating to the broader region, so-called Eurasian Economic Union, which includes Kazakhstan, by the way. Yeah, and let's move on to other countries, and we'll have Kazakhstan, Uzbekistan, and Belarus. Key tax changes in Kazakhstan, which are going to take place next year, and which are definitely going to affect many, if not most, cross-border investment structures that investors have, multinational investors have when investing in Kazakhstan. So the first development change that will become effective next year is that there will be 3-year the 3-year dividends exemption will be abolished, and it will be replaced by reduced 10% withholding tax rates. It relates to dividends, obviously. Yeah, we're talking about dividends exemption. It used to be in force for quite some time, but it was decided to abolish it and replace it with a reduced tax rate of 10%, which is still better than the domestic rate of 15%, but which is not as good as zero, of course, and is not as good as withholding tax rates that many treaties that Kazakhstan, tax treaties that Kazakhstan have that with other countries provide. And yeah, so when paying dividends next year, it will be necessary to check if tax treaty benefits are available. The change doesn't really affect subsoil users, companies that operate in the mining industry, for example, but for regular common businesses, it will mean that repatriation of profits will become more expensive because of the withholding tax rates being applied to dividends, as well as more difficult administrative-wise, because it will be necessary to collect necessary documents and prove the reduced withholding tax rates next year. And yeah, the 3-year exemption right now is still in place, and until the year ends, there are a couple of weeks when it is possible to distribute dividends without withholding tax. Obviously, if the conditions for the exemption apply, but otherwise, next year it will become more difficult and complicated and costly. The next development is on the positive side. There used to be, and still until the end of the year, there is a rule that domestic dividend exemption for received dividends only applies if dividends are not paid out of profits which were not subject to corporate income tax in Kazakhstan. But it's going to be changed next year, and even exempt profits distributed to other Kazakhstan holding companies, for example, will be able to qualify for the exemption, for dividends exemption, which is good news, obviously, for complex multi-layer structures in Kazakhstan. It will be possible to repatriate profits, especially those that invest in special economic zones where profits may be fully exempt from corporate income tax. It will be possible to benefit from the exemption. It will be possible to change the structures to leverage this exemption and so on. And finally, cross-border services will be subject to deductibility limits of 3% of revenue of the company. So if a company in Kazakhstan pays services to a related party outside Kazakhstan, or services or license fees, the deductibility of this expense relating to this payment will be limited to 3% of revenue of the company, of the subsidiary in Kazakhstan that pays such services and royalties, and they are aggregated for this purpose. And the limit is 3% of revenue, which many companies may face and may need to consider and take into account, and effectively limiting their expenses that they can deduct against profits in Kazakhstan. This, as well as other changes, we already discussed a couple of months ago on a webinar in October, which was specifically devoted to tax developments in Kazakhstan. And there will be a link on this slide when you receive the presentation, so you can check it out and go into more details of these expected changes. There will be more changes next year in Kazakhstan. Most likely, we'll see new wave of tax reform. And it was announced that um, there will be changes to the tax code of Kazakhstan. It is yet to be seen what kind of changes will emerge. But one change which was broadly discussed is which has not yet came into force, but maybe considered next year, is to a condition that treaty benefits to active income only apply if a number of conditions are fulfilled, including a subject to tax criterion, which now applies to passive income and distribution of passive distribution of dividends, for example, or other types of passive income that foreign companies receive from Kazakhstan. It may apply to active income as well. Kazakhstan concludes new double tax treaty, and a double tax treaty with Oman and Indonesia are pending. And as I said, we'll definitely see more developments in Kazakhstan next year. Let's continue monitoring them, and we'll definitely address them when the time comes. Okay, the next country we are going to address is Uzbekistan, and I will pass the floor to Sardor Shermatov, and it will take maybe a minute to switch to him, and I will turn off my camera, but please don't leave. Wait a few seconds, and you will see Sardor.
Hello, colleagues. It's nice to see you all. My name is Sardor Shermatov. I'm a tax director leading tax practice here in Uzbekistan. So I will briefly walk you through all the major changes in tax legislation of Uzbekistan, which are upcoming either in 2023 or in the nearest future. Okay, 1 second, please. Okay. So the first major change is the expected reduction of standard VAT rate from 15% to 12%. This is the second decrease of standard VAT rate in recent years. In the course of 3 years, the rate was reduced from 20% to 15%, and now, starting from January 2023, we are expecting the reduction 12%. Also, it is worth noting that Uzbek government has introduced certain tax concessions with respect to stock market and corporate bonds. So basically, dividend income from stock by shall be exempt from personal income tax until December 31st, 2024. Similarly, dividend income from stocks derived by foreign legal entities or FLEs is subject to domestic withholding tax rate of 5%. This is the unification to the tax rate which is applicable to domestic legal entities deriving dividends from stocks. And thirdly, incomes derived from corporate bonds, which include capital gains and interest income and other incomes derived from corporate bonds of Uzbek legal entities. I mean, bonds issued by Uzbek legal entities shall be exempt from both personal income tax and corporate income tax. The next anticipated change is the introduction of tax-free system from 1st of January, which will be launched in SMO. We don't know yet which types of goods should be covered by the tax-free system. The next quite interesting, I would say, news piece is the creation of large petrochemical free economic zone in Karakol region of Bukhara, which is expected to be set up before 2025. The expected volume of investments should reach $10 billion US. So we welcome all the entities to discuss the participation in this free economic zone. Also, from 1st of January, participation threshold for controlled foreign companies shall be increased from 25% to 50%, and this will make our regulations similar to the Russian ones with respect to CFC threshold. Another important development is related to the contemplated establishment of Tashkent International Financial Center, which is I would say encouraged by a similar center in Astana. So far, we have very limited details. We only know that the government is very determined to set up such special zone, and that the special zone shall be dedicated to creation of infrastructure for data storage and processing for financial institutions, money transfers, Islamic banking, fintech, and all other relevant industries. Also, in 2022, Uzbekistan has filed official application for joining OECD's Global Forum. It's worth noting that as of today, Uzbekistan has not officially ratified international tax initiatives which are supported by OECD. I mean, out of BEPS action plan, we have introduced only transfer pricing, and basically there's no ratification of multilateral instrument, country by country reporting, and so on and so forth. But still, this is a very important step for Uzbek fiscal authorities. Well, basically, this is it for Uzbekistan. We'll be happy to answer your questions. Thank you very much for your attention.
Okay, I'm back. Yeah, I hope that everyone can hear me and see me. But please type in plus or something else in the chat section, so that I knew that you can hear me and the technology doesn't fail us. It looks like everything is working. Yeah, thank you. Let's continue. And yeah, I'll need to put on the slides. Just a second. Yeah, I hope that you can see the slide as well. So we will continue with Belarus, and we will discuss basically the beneficial ownership guidance explanatory letter that emerged relatively recently, and it indicates shows a trend that beneficial ownership concept is being developed in many countries of the region. It's an interesting development. First of all, just to before we dive into details, beneficial ownership is a concept which is used to apply tax-free benefits, and whenever passive income is paid outside of a country and tax-free benefits are applied, then usually they can be denied if and become inapplicable, challenged by tax authorities if they prove that the party that receives this income is not the beneficial owner of this income. So classical example would be to pay income to intermediaries who just do nothing else but channel this income to somewhere else where double tax treaty benefits are not available. In this case, it is natural, it seems natural that treaty benefits are not allowed in such situations. And in 2014, we saw this practice starting to emerge in Russia. And over just a few years, beneficial ownership concept became one of the major tools that the tax authorities used, Russian tax authorities used in tax audits. And they successfully challenged, in many circumstances, challenged treaty benefits. And now, after 7 or 8 years, it's very difficult to apply treaty benefits unless there is a proper substance and operating substance and physical substance in the country and in the company that receives income that is supposed to be subject to tax treaty benefits. So unless there is a real substance in the company that receives payments out of Russia, it's difficult to apply tax treaty benefits to income which is subject to withholding tax rates, mainly interest, dividends, and royalties. And in other countries of the region, it may become even more important because, for example, in Kazakhstan, not only passive but also active income is subject to withholding tax, and treaty benefits become even more important. Okay, but in Belarus, we have this new clarification letter by the Ministry of Finance that says explains which entities are not able to claim treaty benefits because they are not beneficial owners of income. And those that are able to claim treaty benefits, they, first of all, as the ministry says, should carry out business activities. Well, the term is broad. It's not uncommon to claim even holding activities, for example, as business activities. But yeah, it may be understood in a more narrow sense, like operating activities and receiving active income apart from passive income. It's not further detailed in the letter, but it may be it may receive additional and further detailization in practice. So the beneficial owner should be a direct beneficiary of income, which doesn't really say much. It has to have the rights to independently use and dispose of this income at its own discretion. Again, this condition is rather vague and can be interpreted differently. For example, when dividends are received and distributed up the chain, Russia tends to see such situations as where the ultimate beneficiary of income somewhere else, is not the immediate recipient of this income, but other approaches in other countries may tend to look at it more from a more legal perspective, where dividends are received as and booked as income. But it gives a basis to argue that the company that booked dividends as income really is the owner of this income. And then the last condition is rather specific. I haven't seen this specifically, for example, in Russia, specifically mentioned or stated in guidances in Russia, that the company that receives income should not conduct activities that are limited to that are directed by its, so to say, so-called management bodies, without involving employees or other persons with necessary qualifications. So it's more about substance. It's about situations where, for example, so to say, letterbox companies, they may only have one director or a few directors, but nobody else. And in the opinion of the ministry, it wouldn't work. It wouldn't prove that the company is a beneficial owner of income, which is quite fair. I think companies that do not employ anyone except for a single director, which may also be a director, which is not uncommon in a few other companies, then at least this needs to be considered further if this company really has operations and is managed professionally from the country where it is located. And we received a question, and I'll read it out. Are there practical developments on MLI, principal purpose test, and PEs in the CIS? And the short answer is, well, not necessarily no, but the developments are very limited. There are hardly any practice that relates to application of the multilateral instrument and the principal purpose test in Russia, for example, and as far as I know, in neighboring countries. So, for example, with Sardor, we discussed briefly before the events. Yeah, Uzbekistan is not part of this international convention, so it doesn't really become relevant in this country. But even in other countries, where even in Russia, in other countries, Kazakhstan, that signs and apply this multilateral instruments, there is hardly any practice of application of the principal purpose test, for example. First of all, I think the reason is in Russia, for example, is because this principal purpose test is defined rather broadly. And second, I think in Russia, the tax authorities found an effective and similar instrument, beneficial ownership concept, that they use to successfully challenge treaty benefits. They kind of do not really need an additional argument because they are already successful in challenging treaty benefits based on the beneficial ownership concept. In other countries, we'll have to wait and see. So far, I haven't seen. It looks to me that these developments of this multilateral instrument is more discussed than actually applied. But obviously, I don't know everything. There may be cases where it is applied in practice, but it's not really visible. There is no case law that indicates that it is successfully applied by the tax authorities. Not to the least because it's a new instrument, it's not easy to apply, and because there are other instruments that the tax authorities are used to use. And the same is true for permanent establishment. This permanent establishment concept in Russia, for example, despite it was in the tax code from the very beginning, and as well as in other countries. For some reason or another, it seems to be difficult to be used by the tax authorities. So in Russia, we have few cases where it was applied in practice, but there are some successful cases, if you caught cases, but they are not recent, and the trends doesn't seem like the trends is going upwards in the application of permanent establishment as well in Russia, and to the extent that I'm aware of, in the countries of the CIS region as well. Okay, this is it for the first part, where we discussed the changes that affects cross-border structures. And the second part, which is going to be much shorter, the second part will be about changes that affect restructuring projects. And we'll continue discussing tax and some non-tax developments, but specifically that impacts possibilities for businesses to restructure their, to change their cross-border structures, cross-border investment structures. Yeah, so two developments we'll discuss. One is changes in currency control rules in Russia, and the other contribution of assets to property, because we've seen some clarifications and new case law emerging in this respect in Russia and in Kazakhstan as well. So currency control, and in the beginning, I mentioned the blacklist that is used for restricting transactions with Russian subsidiaries controlled by so-called non-friendly countries. And in September, we saw a new decree that effectively limited transactions with limited liability companies, because before that, in March, the restriction was introduced in relation to immovable property and securities, while participation shares, participatory interests in limited liability companies in Russian OOO, so-called OOO, they are not considered as securities, and this is the same as true in some other countries. Although this is not really common based on my experience internationally, that there are companies that being limited liability companies do not have shares, but it is the case in Russia, in Kazakhstan, in Belarus, and I think in some other states as well. So this limitation that was initially introduced in March didn't apply to limited liability companies, which represent the largest share, I think, of subsidiaries. This form is used much more often than securities and than the other form, being joint stock company. It is more common for investment structures to see Russian limited liability companies rather than Russian joint stock companies. But in September, the decree which was passed and issued effectively limited and restricted transactions which involve disposal of participatory interests in Russian limited liability companies controlled by entities in non-friendly countries. And to do it after the decree, it is necessary to apply for a government approval, which I briefly mentioned in the beginning, which is a burdensome and time-consuming process with no guarantees of success, unfortunately. But the decree also contains a carve-out, an exemption for the restriction that says that if non-friendly country is ultimately controlled by a Russian person or company, and the control disclosed with the Russian tax authorities, then transactions are possible. And this exemption, based on Russian control, seems to still have practical difficulties for businesses that try to apply it, because there is few practice and there is no specific guidance, for example, from any authorized body to the notaries that have to notarize transactions with shares in limited liability companies, which make it difficult for some notaries to use this exemption. And not all, far from all notaries agree to apply the exemption and notarize disposals of shares in Russian limited liability companies. But it is what it is. Hopefully, the decree is relatively new. There are just three months past since it was introduced. Hopefully, we will see more practice emerging, and yeah, we'll see more cases where this exemption applied, which is important for restructuring projects, obviously. Another development is that again, it's in the area of currency control, and Russia has currency control rules. And if we have that of a non-Russian company to a Russian company, which we see quite often in international structures, this debt has to be paid back to Russia in monetary form. This is the main so-called repatriation rule of the Russian currency control. And sometimes it's difficult, and usually it is much easier to offset some other obligation. For example, the Russian company may have extended a loan to its parent company before it distributed dividends, and for some period of time this loan existed, but then dividends were declared, and it would be natural to offset two mutual obligations. On the one side, to distribute dividends, on the other side, to return the loan. But it wasn't possible to do this without violating the currency control rules, and specifically this repatriation rule. But a few developments over this year made it possible, and I list some references here. And not being a lawyer, it will be difficult for me to, without consulting with someone from our legal team, to say for sure whether it is possible to offset mutual obligation. But it looks like I had a few projects where we managed to find, in specific circumstances, we managed to find grounds to make offset of mutual obligation without actually paying cash from outside Russia to Russia to fulfill this repatriation, currency control repatriation requirements. Okay, and the second part is of the restructuring section is contribution of assets to property, and this is an interesting thing. I do not think that every other country has the same rule where it is possible to make an equity contribution to a Russian subsidiary, to a Russian company, without increasing its capital. And this is a specific legal form that is called contribution to assets, or sometimes is referred to contribution to property. And lawyers like it because it is easier. It is usually easier to contribute whatever assets into property instead of contributing them into share capital. And a new clarification emerged this year, and it addresses a situation where a parent company with a Russian subsidiary had a debt claim to a third party, okay, which is shown on this slide. And this parent company decided to contribute its claim to a third party to the assets of the Russian subsidiary. And what the Russian Ministry of Finance said was that, first of all, the initial transaction, the contribution itself is not taxable because it falls under the specific exemption that applies to contributions to property, which is good news. Unfortunately, when the debt is going to be collected by the subsidiary which received this contribution, it's going to be taxed as income in full, because when that was transferred as a contribution to property, its cost basis, its acquisition cost, became zero. And this is a feature, is a specific feature of this type of transfer, contribution of assets into property, into assets, that the cost basis is not inherited by the company that receives the contribution, which I think, at least formally, Ministry of Finance correctly stated that due to this, I would say this is just not addressed specifically in the Russian tax code. This is why this problem exists. And when the debt is collected, it will become taxable. And this conclusion is sort of confirmed by a case which was recently considered. And the case involved contribution of debts of a Russian company into its property by one of its shareholders. And you see on the slide the structure where the Russian subsidiary had two shareholders, two participants. One of them, the major investor, the major participant, had a claim to the company, which emerged in some restructuring during the restructuring projects a few years before the events took place. But then it was decided to contribute this claim, this debt of the Russian subsidiary as an asset into its property, into its assets. And basically, since the asset and liability, they were in the hands, they became became to be in the hands of the same entity, the Russian subsidiary, they effectively eliminated. This contribution led to elimination of this debt because the creditor became the same entity as the debtor. And in 2021, last year, the tax inspectorate conducted a tax audit and charged profits tax to the Russian subsidiary on the amount of debt which was contributed and then subsequently eliminated. And the grounds for the claim were exactly as as the Ministry of Finance on one of the previous slides stated, because the contribution, although as such the contribution is a tax-neutral event, but then when the debt is settled, it's a different event, and since there is no specific exemption, there is no rule to inherit the cost basis by the Russian subsidiary, by the entity that received the contribution. Because of that, the offset of this debt, the elimination of the debt, became a taxable event. And courts of the first and the appeal instances, they agreed with the tax inspectorate and, supported their position that the Russian subsidiary had to pay a significant tax, 20% of the debt which was contributed into its property. So such actions, such contributions need to be considered carefully, and we can discuss what can be done, what could be done differently to avoid this problem in this specific case. What the company, what its shareholders could have done to avoid the claim. First of all, if there was another debt in the opposite direction, the companies could have offset this debt, and this debt in some way is easier to create because you can increase share capital, and that creates a debt of the shareholder to pay, this additional share capital, and then it can be offset against the debt in the other direction from the Russian subsidiary to the shareholder to repay its loan or whatever the debt is. So it is possible. It is not always possible because for offset you need two obligations instead of one, but you can create one if necessary. Second possibility would be to just forgive this debt, and it's not ideal, but it is possible. I will not go into much detail because there are, specific circumstances where even debt forgiveness can lead to taxation of either loan or loan and either interest on the loan, accumulated interest, or the loan and accumulated interest, both. But it is a possibility. It may, depending on circumstances, may be more efficient to do the forgiveness. But my favorite is the contribution of cash with subsequent settlements. So instead of contributing the claim as an asset, it was possible to contribute cash, monetary funds into the assets of the Russian subsidiary, and then the subsidiary could have used these funds to repay its claim to the shareholder. And the only reason, or the only situation where it would have led to tax obligations is where the shareholder doesn't have cost basis of acquiring this debt, or the cost basis is less than the nominal value of the debt. We do not know from this case if it was indeed so that the restructuring, due to the restructuring, the cost basis for the shareholder was less than the nominal value of the debt. But if it wasn't, then contribution with subsequent settlements would have worked much better than the contribution of the debts of the claim itself. Okay. The situation is different in Kazakhstan. It is possible to do a very similar transaction in Kazakhstan. It's called slightly differently, but the rule is the nature, the essence of the transaction is the same. It is possible to contribute assets or money to a subsidiary in Kazakhstan without increasing its nominal capital. it is possible. It is definitely possible for limited liability companies, and it seems to be possible for joint stock companies in Kazakhstan as well. And recently there was a clarification published this year from the tax service of Kazakhstan, stating that if additional funds were contributed as payments to the joint stock company, then tax implications depend on the nature of the contribution. If the contribution was not accompanied by increase of capital of the subsidiary, then this contribution is taxable. If it was contribution that led to additional capital, then there is an exemption that applies and no tax should be due in Kazakhstan. And this is an important difference between Russia and Kazakhstan, where while in Russia we have this exemption for contributions to property, contributions to assets, in Kazakhstan it is not available, which makes this type of contribution less beneficial. Obviously, 20% paid on any contribution into equity essentially is not something that many companies would tolerate. This is why and this response related to the joint stock company, but the same response a couple of years ago was published in relation to a limited liability company in Kazakhstan. Again, solutions are possible. In Kazakhstan, it is possible to contribute assets and increase companies, the subsidiaries' capital simultaneously. And if it disrupts shares, the shares can be adjusted to reflect the target, the desired proportion. And this final table, it compares two types of it compares contribution to assets and its implications in Russia and Kazakhstan. As you can see, there are two advantages why this type of contribution is so popular. One is that it doesn't change the proportion of shares in capital because it doesn't involve change of capital, and it is therefore easier to accomplish. This is why lawyers, they love it. They tend to use it just to simplify paperwork and formalities necessary to transfer assets from the parent company to its subsidiary. But it doesn't come without problems. And although, in Russia, contributions to property are fully exempt, in Kazakhstan, they are not. But then in Russia, as we saw from the case and the Ministry of Finance's clarification, there is no cost basis which is transferred along this contribution, which means that when contribution, for example, asset is sold or debt which was transferred is settled, it becomes taxable in Russia. It's not the case in Kazakhstan, and the reason is because after we contributed and paid included assets into income, this income then can be used as a cost basis. The amount of income serves as a cost basis for deduction, but I don't think that it really helps because ultimately tax is paid at the initial step upon the contribution. And sometimes it is another question and problem issue with contribution or transfer of assets from the parent company to subsidiaries overlooked. It is whether cost basis is created not for the subsidiary and for its asset, but for the parent company which made the contribution. And in Russia, it is created, but only to the extent that monetary funds of money, cash, effectively, is transferred. In Kazakhstan, there is no rule to increase the investment, the cost basis on investment of the parent company into subsidiary for tax purposes if contribution to assets takes place. Okay, I think we are done. We are done and completed today's agenda. Yeah, I will read out questions. I think we have only one question from Tatiana. Tatiana is asking how such assets will be treated in balance sheets. I think the question relates to contribution to property, and in it should be reflected. I'm not an accountant, but it should be reflected in the company's equity in one way or another. I think in Russia it's called. No, I'm not sure that I can immediately name the Russian term, but it's somewhere in the company's capital, in its equity, in one way or another. So it is very similar, although it's not charter capital, so-called, not a formal capital, but it is reflected in the same parts of the balance sheet where equity is reflected. Okay, so I think. Tatiana is also asking another question. Does assets contribution from Russia to Kazakhstan controlled by specific customs regulation? I think to the extent crossing a border physically is concerned, I think the answer is yes. Whenever, yeah, there may be. I mean, Russia and Kazakhstan, they are parts of the customs union, and it may simplify the situation, but other things being equal, it is not about the form of transfer, it's about physical movement, I suppose, and crossing of border between countries. Crossing of border between countries. Okay, I think this is it in terms of questions. And before we finish the presentation, I promised that there will be a present for those who waited up until the end, and this is the moment. This moment has come, and the proposal, the opportunities is a free restructuring workshop for anyone who would like to discuss their cross-border structure and feels that their cross-border structure is not in line with current environments and business needs, and to change it, you already know where you would like to occur, where you see how you see your ultimate, your destination, your target structure. And if you know your target ideal structure, then we could discuss with you what would be the options to transfer from the present structure, which is not ideal, to this target structure where you would like you to be. And to use this opportunity, you just can send a request at my email address. It is here. It is vkalgin at kept.ru. And yeah, just send me a note requesting for a free restructuring workshop, and we will request additional information. Obviously, we'll need to know what your current and target structures are. We'll look at it, analyze it, and agree with you a time for a restructuring workshop. Okay, I think this is it. And I'm never tired of saying that each situation is unique, and this is why you have slides with our contact details. Whenever you have questions about your specific situation, your structure, your tax difficulties that you face, you can contact us, and you see the contact details of the speakers on this slide. Okay, now we should call it a day. It was a pleasure to spend the last 2 hours with you. Thank you very much for your participation, for your questions, and see you next time on other events. Yeah, thank you.